Hi everyone, in today's video we're going to talk about a useful tool that when used at the wrong time can actually make things very difficult for you when you're looking to purchase a home. So here we go. So what is the tool I'm talking about? I'm talking about on your credit if you are disputing an account. So let's say you have a trade line and there's the balance on it and it doesn't make sense. You're saying, why is this balance showing what it is? I'm going to dispute this trade line. I'm going to tell the credit bureaus there's something wrong with it. I'm going to put it in dispute. So this is a useful tool when you're trying to get them to figure out what the problem is, because they have to prove whatever's on your credit report. They have to actually prove this, that they got to prove it's yours, and they got to prove the information is accurate, and that everything is showing as it's supposed to show. Now here's the thing. When you're looking to buy a house, your credit report will be run, the accounts are going to be listed, and if there is something going on with your account like it shows it's in dispute, that's a problem. It's a problem when it comes to underwriting. So up front, it may not look like much. But what happens is when you put an account in dispute, it removes that account from being read and being calculated as a part of your final actual FICO scores. So your actual credit scores are. So that account is being omitted. So what happens is if you're in the process of buying a house and an underwriter is reviewing your file, usually the loan officer would see this, but this can happen to underwriting. The underwriter is going to say, I don't know what this person's FICO scores really are because these accounts are being omitted because they're in dispute. They need to be taken out of dispute so we can see what your actual FICO scores are, and then we can help you. So how does this throw a monkey? It kind of monkeys everything up, throws a monkey wrench in the whole thing, whatever the saying is. That's the problem, because since they're not affecting your FICO scores, and your FICO scores can either be, I can do this loan program or I can't, or this is what my pricing on my rate is, your FICO scores are really important. So by taking those accounts out of dispute, your FICO scores are going to drop, especially if there's late payments on those accounts. Because those are huge. Those kill your FICO score, are late payments, if that's why you're disputing it. Now, if it's just some other arbitrary thing is up with the account, like maybe the balance isn't accurate, but you've been paying it on time, then maybe it may not have a problem. But what usually happens is that there's late payments on that because for whatever reason you think, hey, there's something wrong with this, I'm not going to pay it. So they start reporting it as late, and it's this cascading problem where if it gets shown on your report and it hits your FICOs, it usually drops them. And usually with late payments, it can drop them significantly. So it is a good tool when there is something wrong on your credit report and you're trying to figure out what that is and you want to get it fixed. Cool. That's usually the tool. They open an investigation. They have to prove that it's yours. They have to prove that it's accurate so that they can report it. But when you are trying to buy a house, it's not good. It becomes a problem. So just something to be aware of. This is another one of those little credit quirks I want to talk about that we run into when we're processing loans or when loans are being underwritten when you're going to buy that house, where if that pops up, it's a problem. Because now let's say you were marginally approved. You're at like a 640, everything looks good, but you have two accounts that are in dispute, and the underwriter says, we gotta take the disputes off these accounts, then boom, your FICO's dropped to 500 or something crazy like that. Now you don't qualify, and now you don't qualify for that house, you might lose money on it. It's a big deal. So if you currently have accounts that are in dispute and it hasn't been taken care of yet, be aware of that sort of thing if you're looking to buy a house, because it's one of those things where you're like, look, my FICOs are great, and it's like, well, it's because this account that you're disputing that hasn't been taken care of yet is not affecting them. So something to be aware of. It's just one of those other little credit nuggets I wanted to share with everybody. I've been in the mortgage industry for over 8 years now. I've seen a lot of different things that happen with credit. If you have accounts that aren't yours, or, it's not your account and it's reporting on your credit report, you can either dispute it or start an investigation on that account. You can actually go to the credit bureau and say, look, this is reporting, it isn't mine. They usually have about 60 days to prove if it's yours or not, and if it's not, they take it off. But it's a long process. Almost everything with credit takes time. It's going to take 30 days, 60 days, 90 days, because the reports update every 30 days on these different accounts. So whatever activity you're doing, it takes a while for them to show up. So yeah, that's something to be aware of. If there's something on there that isn't yours, by all means, do what you got to do to get that account off. If it's not, awesome. If it's a late payment, if you were legitimately late, it's going to stay. There's no way to get it off of there. The only way that you can get late payments off of it is if you can prove that you were not late on that account. You have to show it with documentation, just like you would for anything else that you're trying to figure out in the loan process. You got to be able to document it. If you could say, look, I paid this payment on this day, I have this record of it, it went through, it was accepted, but for whatever reason you didn't accept it and now it's late, that's where you need to go after them because you've got documentation to prove it. But if you think, well, I don't know, it's going to stay there. So don't even try. It's just going to take time and it's going to be a problem. But if you want to, if you're going through the process of buying a home, be aware of what's on your credit report. You can pull credit reports for free once a year from each individual bureau and at least get a consumer version of your report and see what's on there, see what's reporting. Old stuff that's been paid off will fall off after 7 years. Most of the bad stuff will fall off after 7 years if there's no activity on it. A lot of things will happen over time, but it's good to know what's actually on there. So if you like this content, you find any value in it, please like the video, leave a comment down below if you have any questions. I'd love to start a dialogue with anybody who's watching these videos, just to help, because if you have a question, that means other people have that same question guaranteed. That's just how it always works. And subscribe to the channel if you haven't already. So that's it for me today, guys, and we'll talk to you again soon. All right, peace.